Lightning like Steve McQueen. I'm in the fast lane when the light turns green. And I built tough, I ain't nothing but grit. Cause I made rugged blood, sweat, and spit. Yeah, like a horse I fly. Better push yourself in for a bumpy ride. I like to play hard, but I work harder. And I weather the storm cause I'm built stronger.
What is up, ladies and gentlemen? We are back. We are live. I'm going to save the entire intro. You guys know what to do. Because I got a guest who's going to come on here in a second, and we only got him for like 15 minutes today. It's action-packed, though. It's going to be in regards to all my drivers out there who listen to this show and that article that I broke down on Monday about the ATRI report about the cost of truck operating. And my man Adam Wingfield here talks about this literally all the time about knowing your costs and everything. But Adam, what's going on, man? It's been a while.
Man, it's been, like we said, man, it's been forever since I've been on here. So good morning, everybody. Hope everybody's doing good. Happy hump day to everybody.
Yeah, man. It's dude, because it was like we'll text each other back and forth, but I'm like this. I saw this article and I was breaking it down on Monday, and I believe I said in my stream, I'm like, I got to get Adam to come on and talk about this because I thought I saw a post of yours kind of talking about like this is so dangerous to put this out there for people. Why is that?
Well, there's a couple of reasons. ATRI obviously is a very, very broad-based research institute. If you don't know who the ATRI is, they're a trucking research institute. The problem with the actual cost of trucking operations, it was just used as a blanket. Hey, this is what it costs to operate a truck. Mm-hmm. The biggest problem with that is that they only sampled 434 people. And out of the 434 people, it was a mixed use of carrier size. So you think about that. You think about the people that responded. You think about the people that were involved. And when I say mixed use, all from small all the way to large carriers, and they came up with 227. Well, here's the problem with that data. Obviously, 95% of the industry is comprised of small carriers that own and operate less than 10 trucks. But then also one of the bigger layers to throw onto it is that out of 434 carriers, there are over 100,000, there are hundreds of thousands of active motor carriers that actually have fleets and vehicles that are operating down in the highway that have not been polled for the research. And also, and if you want to throw in another asterisk to make it even more fun, think about the fact that how many owner operators that they polled or how many small fleet owners that they polled that don't know the true cost of operation when it comes to operating a truck. Mm-hmm. So now you have 227 that you may think that that's a great point. Like, hey, I won't move my truck for 227. I saw it in a post. It was from a lobbying group that I will leave out and I won't name them here on this show. But it was a reckless post where they said, hey, ATRI says it, don't move your truck for less than $2.27. That's what your operating costs are. Well, the issue is that if you use that as your own farm or your own operating cost and you say, hey, that's what it cost me to operate. What if your operating cost of $2.37 or $2.47? Yep. Now you're thinking that you're doing well by, hey, you know what, I'll take $2.30, but you're not covering the cost of your operations, and you're slowly and surely eroding every little bit of profit that you're moving every single time that your wheels actually make a positive rotation. And that's the problem. You can't generalize numbers. You're in business, and when you start a business, you're in business for yourself. And most importantly, you've got to be astute when it comes down to your own numbers. I've seen break even in operating costs range anywhere from $1.80, like today, $1.80, paid off equipment, great insurance, been in business for a while, got their own niches, $1.80 from a cost of operation to all the way to $2.47, $2.57. So the range is very, very wide. If my cost of operations is $1.80 and you're telling me not to take a load for $2.27, then that's stupid. Mm-hmm. Because at the end of the day, if 20%, I make 20% profit on $1.80, what's that, like $2.15, $2.16?
Yeah, ish.
You mean to tell me that 20% is not good and that's not sustainable? So you want me to say, hey, you know what? I'm just going to sit in my truck. I'm not going to do anything. I'm going to do something probably that's going to cost me money than move my truck to operate. You got to have a long-term vision. That's called your operational run rate. Your operational run rate is what your intention is and what you're intending, what you plan on in terms of profits. So if I want to run my business and I want to make a profit and I lay out, say, hey, you know what? My operational cost is $2, right? If I want to make a 20% profit, I can't move my truck for less than $2.40. I need to plan on where those 240s. I need to find lanes. I need to run with brokers that can keep me around that. I'm not going to win everyone and I'm not going to lose everyone. But most importantly, the biggest thing is that you have to know your own numbers. And one of the things that I said, and I'll never forget this, is probably it's one of my favorite things that I've ever said, ever, in terms of speaking to a group of entrepreneurs. Mind your damn business.
I love that line.
I can't focus on like that 227 is not your business. That is the ATRI, which I'm not bashing them. It's
Yeah.
research, right? But it's a small, independent, controlled sample. And because of that, you weren't part of that research. They did
Yeah.
not reach out to you.
I look at it like this too, Adam, and because I believe I followed up, and fact checkers can fact check me if they want. I believe I followed it up on Monday with saying like that's my problem with national averages for rates out there and stuff like that, because I just paid $6 a mile for a dry van the other day. All right, $6 a mile. It was a 100-mile run, but I paid $6 a mile on it, so that's technically skewed compared to the national average of dry vans saying 220 a mile and stuff like that. So again, it's like it's identifying these markets that are out there, and really, I think like you got to stop paying attention to the national averages. Not like don't ignore them, right? Like data is data, and you need to pay attention to that. But how you need to look at it is how is this applicable to my business? Okay, how is this applicable? What like again, you want to talk about like the amount of opportunities that are out there, man, where people are paying $6 a mile or $5 a mile for stuff like that. And yeah, it might be a 100-mile run, and it might take up a couple hours of your time that day, but it puts you into a good market and stuff like that. Again, like how many loads are you overlooking because it's like, oh, that's just a short haul. They're not going to pay anything. Like you got to explore all this stuff, and you got to find this stuff out, and you got to pay attention to it as your business, not what other people are saying. Because my big fear with a lot of this stuff, Adam, and you talk to business owners and trucking company owners literally all day long, every single day out there. My biggest fear for a lot of people is not that the market is challenging, because the market's always going to be challenging. Business is always going to be challenging, but they're going to take some of this information out there and then not actually look into how is it applicable to your business and how does it affect you?
Yeah, the biggest thing, just like I said, like if I just say, "Oh, whew, I'm glad the ATRI did the research for me. Now I can just run my business. My cost of operation is $2.27 a mile." You may be blind to the fact that your operational cost might be even higher than that, or it might be significantly lower than that. Your operational cost also changes. It's fluid. It changes all the time. And the reason why I say this is that, Chris, if you're running at an operational ratio, your operational run rate's at $2, your break even's at $2, right? But all of a sudden, fuel prices go up by 30 cents, and your station selection and how you select your stations adds another 10 cents to that. Now, let's layer on the fact that, you know what, I'm over consuming because I've got a clogged up DPF filter that I don't have the money to fix, but now I'm going to have to deal with it. So now I'm sucking out more fuel than I need to. So now that's impacting my overall cost of operation even more. Your cost of operation is fluid. It changes. The only time that I use a national average for anything is on the national average of diesel fuel, only as a benchmark. Only as a benchmark. That is the only reason why we use averages from a national perspective, because it's too broad brush. And if you run your business off of averages as a business owner, you're not being very, very studious when it comes down to operating your own business, and you're setting yourself up for failure.
Yeah, I think that at this point, there's so much stuff that's just being thrown out there, I personally think a lot of it is to deter people from actually remaining in business at this point, right? Because still, man, like I've been doing this media shit for 4 years now. I have yet to see a major news network out there break down, hey, Mr. and Mrs. Trucking Company, this is what you need to do to stay in business. And I'm removing myself from this because I feel like I do a really good job of putting, stuff out there on my podcast. And there might be other ones that I'm thinking about, or that I'm missing. But at the end of the day, I don't see anything that's geared towards helping people stay in business, right? There's a lot of information out there that I feel like is designed to make them do one thing or another, and they're both reckless decisions, right? Because it's like, at this point in the year, I was talking about this last week. At this point in the year, it's the midway point. If you haven't assessed your P&L this year to see where is your money going, where is the money coming from, what does that look like? Like you need to do that right now, because like we got the back half of the year. Have you even thought about taxes for this year yet? Again, like these are the things that you need to be thinking about to keep yourself in business, because at the end of the day, any major media people out there, they're just going to keep posting their shit. It's not their job to keep you in business. But I feel like at the end of the day, you have to take accountability for this stuff. And it was the same thing that I saw that there's some task force out there now about like predatory lease to own stuff out there for owner operators and stuff like that. And I was like, at the end of the day, if you can't afford $500 to have an attorney review that document before you sign it, or if there's a company out there that refuses to let you take that document to go sign, those are the two biggest red flags that you shouldn't be in business right there. Like you should stop yourself in that moment.
No, I totally agree. And especially with something that's long-term like that in business, you have to absolutely have either business oversight when it comes down it from a legal perspective. And in anytime you get into any type of agreement, any type of contractual exchange, you need to make sure you have an attorney present. Like we cannot not wait on the government to create task force for us to help save us, because obviously we know how that works. And then when you think about waiting on the FMCSA to bail us out of anything, you know how that works. You got to own your business, man. You got to mind your business. And I think that that's one of the biggest issues is that folks get in this trucking industry and they think that they buy a truck, buy a trailer, get behind the wheel, however, and that's it. Hey, I was able to back up this trailer with the best of them. I can run a good trucking business. I know how it works. I know how to do this, that, and the third. And it's just not the case, man. And I think that as time goes on, especially in the data time and the way that the actual industry is shifting, I think it's going to be more and more difficult. And now, quite frankly and quite honestly, I think we'll see failure rates increase just because, man, things is getting flushed. And I think that the freight recession that we so elevately got ourselves out of, or working ourselves out of, really helped purge some of those ones that are not doing the things that they need to do. It purged them out, it really purged them out pretty quickly.
Yeah, I think that no matter what, if you got yourself into these situations, like there's solutions to come out of it, right? Like people are going to come out of this market, they're going to be winning. But again, it's like you have to treat this as a business, right? Like it's personal is personal, business is business, and you have to go in and you have to operate it that way. You're not an employee. Like it's your name that's on the line. Like just like with me in my business, I have everything on the line. I don't have any backup plan. Like I literally have every dollar I've ever made in my life invested to make this work, just like you do, Adam. And it's nobody else's responsibility to come in and fix it but us. So it's like, I just look at it as there are ways out there. And again, I think every business, brokerage, trucking company, doesn't matter. You need to look at your P&L right now and see where is your money going? What does the financial health of your business look like? How do you, and again, know your numbers. Same thing as a broker, right? Like you need to know your numbers. What is your break even? Just because you make $100 in margin, quote unquote, doesn't mean you're making $100. What's the cost to process that stuff as well? What do you actually need to do just to break even? And that was one of those things that I learned working for a big company early on in my career is I don't remember the exact number, but for conversation pieces, it was essentially we have to make $75 on a load to break even, because when you have the cost, of acquisition and everything processed through that.
And I want to be clear too, because a lot of times, you see a lot of owner ops and, small fleet owners, they get confused with break even and what you really actually want to run for.
Yeah.
A lot of times we're in a conversation, it's like, hey, your break even point, you need to know your break even point. It's, let's just say it's 215. But then you'll get those folks like saying, well, I'm not moving my truck for 215. Who would want to move their truck for 215? You need to understand that your break even is your floor. It's not your ceiling. It is where you absolutely have to start. The ball bounces at the floor and everything goes up from there. But it's so important that you understand how to calculate your break even point. It is not just fuel. It is not just insurance. It's not just truck payment. And that does not create profit. There are so many different lines, because every time your wheel turns, all of your expenses are amortized within the movement of that truck. So it's so important that you as an owner operator understand that. We cannot use the ATRI research in the small carrier community. We cannot use that because it is a blanket statement. There is so many different variables and different things that go into that break-even point. If you need help calculating that break-even point, please don't hesitate to reach out to me. I might just go live and just take a couple of carriers and just do it with, do a little segment on that. But we just have to make that known.
Yeah, dude, I think that would be awesome if you could do something like that. Show them what their break even is, and then show them, hey, this is what a 10% rate per mile is, profit margin baked in, a 20%, whatever that looks like, so they can actually look at that and see. Because, again, if they're like, oh, I need 215 a mile, then they're like, I don't know, man. I just think like laying this stuff out there for people to know their numbers, so then they can sell. Like if somebody says like, oh, 250 a mile isn't a good, you're like, dude, it's stuff like that. But I know you got to jump here, Adam. You got stuff going on. I'll have Adam back on, ladies and gentlemen. and make that happen. But how does anybody reach out to you quick to find out more?
Hey, you can find me here on LinkedIn. Just go ahead and I'm tagged into this post. Just go ahead and reach out to me in the private chat. Go to our website, www.thetruckingconsultants.com. But then you also can find me other socials as well. But just link me here in the private chat, and I'll be more than happy to reach out to you and assist.
Perfect, man. I appreciate you, Adam, and we'll talk to you soon, brother.
Thank you.
All right. And hey, and if you guys need to get in touch with Adam, and if you guys can't find him, just hit me up. I will gladly put you guys in contact with him. Corey Buchan over on YouTube. Dylan Turner over on YouTube. Sorry, guys, I'm just getting caught up here. Good morning, Orange Shirt Gang. Sonny Sharma in the house. Carla Isted also in the house over on LinkedIn. I'm trying to get everybody over to YouTube, you guys. I'm trying to get everybody over there. I've just heard from so many people that the stream is exponentially better over on YouTube. And get over there and check it out, you guys. And yeah, let's get into some articles here. You guys, the links to the articles are going to be put up onto the iTunes and Spotify for the audio only replay to it, as well as the YouTube channel, you guys. And as always, if you guys get value in what you hear, subscribe to the show, you guys. Share it out there to your network. If you guys want to rank the show as well, you guys. This is how we reach more people, because at the end of the day, this is how we can reach them to help them with all of this information that we put on out there. But first article is from FreightWaves, and it is Werner battling unions on two fronts. One fight may have broader significance. Werner Enterprises ECM unit is battling unionization efforts on two fronts, one of which may be impacted by a recent legal precedent that observers could say could boost union representation efforts. With fewer than 50 workers involved in the unionization push, one of the group employees has already chosen to be represented by a union, a campaign that ultimately brought Werner CEO Derek Leathers into the fray with a personal visit to New Jersey. That campaign resulted last year in approximately 25 workers at ECM units at 3 New Jersey facilities, Cinnaminson, Hamilton, and Piscataway, voting to be organized by the United Food and Commercial Workers Union. It was an effort that spurred Leathers to travel to New Jersey to meet the workers, even though the size of the potential union was a drop in the bucket to the transportation and logistics total workforce of more than 13,000 people out there. Negotiations to turn that successful union vote into a contract, not always a guarantee, are progressing towards that, according to Mike Thompson, who is an organizer at the local level out there. Talks in New Jersey are moving forward. Thompson said in an email to FreightWaves that negotiations could go a little faster, but there has been fairly decent movement on both sides. Shortly after the unionization vote, the union filed an unfair labor practices claim with the National Labor Board relations against Werner. And they says that the complaint was withdrawn in May, which was confirmed by Werner. A potentially more significant battle is brewing in Erie, Pennsylvania. And then that effort could be impacted by the so-called CEMEX decision. That NLRB decision from last year is seen as giving the agency power to order union recognition under certain circumstances if a unionization vote failed in the rank and file system. The dispute in Erie goes back to last year. Unlike New Jersey, the Teamsters Union, not the UFCW, is seeking to organize its workers. Among the developments, the standoff involved the dismissal of 4 workers who union people were let go because of their organizing efforts. Werner's denies that claim. The Teamsters later consolidated check card check in favor of a union. And then it goes on. Let me see here. The Teamsters representation. Check card is controversial. Critics say it effectively eliminates a secret ballot because if a worker doesn't sign and submit a card, it is publicly known as a no vote. And then it goes on to talk about ties to another. There's a lot of information in here from the unionization effort of it. And, you know, I've been very vocal, very, very, very vocal about my disdain for unionization efforts out there. I just think that at this point in time, I don't need to put my stance out there any more than that, but I'm against unions. All right. I am. I think that it benefits the union more than the employee. And I just truly think that it's just in a company, a group of individuals going against a company like that, where it's, like the free market, you guys, is the most beautiful market to operate in, because I look at it like this. If you're looking at a situation where you're employed somewhere and you think you're worth more money, the beauty of the free market is you can go start your own business and compete, right? I think that, from my perspective, a lot of people are out there talking about small trucking companies, and they're always in the news and everything else, but there's a reason why 97% or 95% of the trucks that are on the road right now are 10 truck or less operations, right? The American dream, the creation of the small business, and going out there and carving out your slice of it. Like I'm not involved with Warner at all. I'm not here to advocate on their behalf or say anything in there, but like I just think like these unions are just going after businesses left and right. Like I said it last year with Yellow, and Yellow going out of business. The union should have bought Yellow and showed everybody how great they are at operating a business. Like, why don't they? Right? Like, they could make so much more money, okay, in the free market if the union just went out and formed their own corporation and employed all of their people across the United States, and then competed against all the non-union companies, right? You got to ask yourself, why don't they do that? Why doesn't the union, the Teamsters in particular, who've been around for a very long time, why don't they just start a trucking company? Why don't they buy equipment? Why don't they go and find their own customers? And why don't they do that? You got to ask yourself that at some point, because there's a reason why they're not doing this. There's a reason why it's easy to organize and I want to be abundantly clear. I am not against people's rights to organize and do all of that stuff. I'm a very, very, very firm believer in the Constitution of the United States and the voice of the individual and everything else. But I think that at this point in time, they should just buy their own trucks, pay all of their employees what they want to get the wages raised for at other companies. Just do it. Just go out there and do it. It's way more lucrative to go out there and build your own business. You just gotta, that's just a question that keeps coming up into the back of my mind is at this point in time, why haven't they started their own trucking company? And why hasn't that happened? And why are they just going after all of these businesses that are out there? Because, again, frankly, at the end of the day, again, back to the free market, because the argument is, well, they're not paying us enough money. Okay, well, go find a better paying job out there, right? Like, not everybody's colluding against each other to be like, no, we're only going to pay people $5 a day. That's not happening, you guys. That's not happening at all. I just think like it's just an attack on the free market is all it is. I truly feel like most unions, not all of them, because I don't want to make it sound like not all unions are bad, but I truly feel like the majority of unions are just socialism in disguise, right? It's not, don't work hard. Don't work hard. Just continue to put in minimal efforts, But that's my little rant on that. And then this next article, I don't know if we're going to have enough time to break down all of it, but it's talking about the EPA. Congressional Republicans target the EPA rule. This is from ttnews.com. And it talks about that it costs, the increase in costs for the American families, businesses, and rural communities with fueling, while fueling more inflation. We need to give Americans a choice in cars and trucks that they drive, and affordability and performance for the trucking industry is paramount. Again, the free market. You guys, if you want to buy an electric vehicle and an electric truck and everything, go fucking buy it, right? But don't tell me that I have to drive one because you want to drive one, right? Like I just think that at the end of the day, I've done enough of my own research on this. I've watched enough congressional hearings on Capitol Hill. There isn't a ton of data that says that it's actually better for it. And again, like I said, go Google lithium mines. Go Google lithium mines and tell me how that's better. If you're going to build solar farms out there, how is putting a solar farm out there to charge some of these stations, how is that better for the native vegetation that is in some of these areas that they're building these out. Again, questions you just need to ask, you guys. It's just, and I just, again, will never, ever, ever support any governing body sitting here saying you can only buy this or you can only do that. That's not a free society at all. And it's, again, last time I checked, you can shut off the power. The power goes out. You can store gas and keep your vehicles fueled for an extended period of time on that. But that is going to be it for today, ladies and gentlemen. I got to get back out and slang some more freight. I will be back tomorrow. We got a guest coming on tomorrow. And again, we got a guest coming on Friday. It's a shipper coming on the show on Friday. So if you have any sales or operations related questions for a shipper, if you are looking to get more business and you don't know how to present yourself, I've already got a couple of questions. I got room for maybe one more question to be asked to this guy who's coming on. DM me, you guys. Like again, you're not going to get any more business advice on how to improve your sales process than getting direct feedback from a shipper. All right. So check it out, you guys. We'll be here on Friday for that. But as always, you guys, if you guys got value in what you heard, subscribe to the show. If you're a small fleet out there and you want to talk to Adam and you can't find him for some reason, hit me up. I will put you guys in contact with him. But that is going to be it, you guys. We will be back tomorrow. I appreciate you guys. I love you guys. And we'll be talking to you soon.